Hey guys, welcome back to the channel. Today we're conducting some Shell stock analysis. I'm going to be telling you exactly why I've been scooping up shares in Shell for a very long time now. Right when it dropped back to £9 a share, I was scooping up shares, and I still think that it is a buy at the moment. It is bouncing back strongly and is doing particularly well at the moment, and it's just been rated pretty highly by analysts as well. So stick around, hit that like button, hit the subscribe button, and I'll catch you in there for some good analysis. Hey guys, welcome into the video. So here we are on the landing page for Shell stock, or RDSB in the UK. Not going to be that way for much longer. The company is consolidating its headquarters to the UK, so it will soon just be known as Shell, or the Shell company, and it will be, its ticker symbol will just be Shell as well on all exchanges, which is good. We still have a market cap of 138 billion. It has reached a new high today of £18.12 here in the UK, with a forward yield of 3.3%. I got shares in this company at £9 a share. I had some that were significantly higher than that, but it brought my average down to the low 11s and 12s, so I was particularly pleased with that, and I've made a pretty decent return on this one so far. A lot of people said to get out of this company, oil wasn't the future, etc, etc, but oil still has a massive part to play. Energy still has a massive part to play, even though this company is looking to get greener and go carbon neutral going forward. As you can see, revenue declined to 2020 for obvious reasons, no need to talk about that, but this company bounced back strongly, and it has now been rated pretty highly by analysts at a 1.9, which is just in above the buy side of things, and a lot of it's rated as a strong buy by at least 6 analysts as well, which is pretty good. Over on Barron's, they've said that Shell's buybacks and the low carbon energy shift, which is what I was talking about, makes the company a buying opportunity even at this share price at the moment. It's promising to return 20 to 30% of its cash flow from operations to shareholders in the form of dividend potential raises and share buybacks all the way up until 2025, and also help it shift to low carbon energy. This company is keeping itself relevant for the 21st century, for the carbon neutral, carbon negative age, even though it is an oil company, but still generating massive capital, massive revenue and profit along the way to reward shareholders, but taking care of future proofing itself as well. So Royal Dutch Shell is one of the top picks for Barron's in 2022, citing some pretty impressive figures there in increasing its electric energy output, EV charging points, increasing its garages that do that, and then shifting from the oil side of things to looking at gas, which is a little bit less damaging to the environment, and offering energy as a solution as well. Also looking into the likes of hydrogen and biofuels as well. The company is still doing pretty well. It's one of Europe's largest businesses and has bounced back pretty strongly from the pandemic. Over at the Wall Street Journal, we can easily see that the company is rated as a buy by 24 analysts, overweight as well by 1, 5 holds and 0 sells. Everything is rated as a buy. These share prices here are in dollars, but it recommends an average of $61 per share, $78 as a high, and it is getting along the way towards doing that. If we take a little look at the fourth quarter update note, we can see that the company is again doing pretty well as well. Integrated gas has been bouncing back just nicely. Upstream revenues benefiting massively from the uptick in the price of oil per barrel. The break-even rate for Royal Dutch Shell is around $30 per barrel, so anything more, I think it was about $35 last time I checked, anything higher than that per barrel of Brent crude, and this company is making an absolute fortune off it. So that is the company is benefiting pretty well from that. Yeah, so that's looking pretty good all there. They've got a pretty healthy chemical sector as well, and a corporate sector too. As I said, talking about the integrated gas and upstream revenues right here, quarter by quarter revenue is $2.65 per barrel, $4.17, $5.70 and $6.55. There you can just see the attractive margin that's going on right there. If we have a look at the way the company is going to future-proof itself going forward, they've got 3 pillars to do that. They've got their upstream pillar, they've got the transitioning side of things, and then they've got the growth pillar, which is the future of energy. We've got the transition towards that, and then we've got the upstream, which is the legacy side of things, where it's still going to be doing gas, it's still going to be doing oil, etc. You can see they've set themselves some pretty lofty carbon targets to bring down their carbon footprint as much as they possibly can by doing that for themselves, making themselves carbon neutral, but also the energy they provide to consumers also being better for the environment as well. They're aligning themselves with the targets from the Paris Climate Agreement. And they've got some pretty healthy milestones here to keep themselves on track for that. There's a lot of stuff for Shell's future, all on the Shell investor relations side of things, guys. I would recommend that you dive into this and have a good look into it properly. They're hoping to add 15,000 extra convenience stores by 2025. 1 in 8 machines and engines to be protected by Shell lubricants. 40 million customers served at retail stations, and 55 grow the customer base, grow the forecourt base to 55 Shell branded retail service stations globally, and also add 500,000 EV charge points as electric vehicles become more and more mainstream. Shell is needing to find, and is going to find, a way to leverage that to help protect its revenue and profit margin side of things. They've got a lot of integrated energy and clean energy systems. They're very heavily invested into wind power and solar power, and they're looking to get after hydrogen as well, which is excellent looking forward. They are the world's leader in liquefied natural gas, so they're going to keep pushing that, because that is considered a low carbon option to oil and is a little bit easier to keep clean along the way as well. Chemicals and products, still pushing to get that sector firing on all cylinders as well. They're hoping to use 8% of the capex to go towards core positions, but maintaining a low methane intensity. Methane, if you don't know what methane is, it is one of the most noxious gases on the planet, and it is about 10 or 20 times more damaging to the environment than CO2. So that is why that is a massive thing to keep charge of. They're divesting their way out of some of the stronger other oil fields to concentrate on a few key highly profitable places, and that is some of what you can see here. They're trying to synergize themselves so they don't have to produce so much. They're not going to go after new oil fields, they're just going to go after what they've got, because they believe that that will be enough to see them through into the new age of electric and gas being the more dominant side of things. You can see the capex evolution right here from 2020 through to 2025, bringing that upstream transition and then growth side, rebalancing that from where we are now to where the future is, pivoting towards that growth sector and accelerating the strategy through, as you can see here. The sell-off in Shell's share price throughout the pandemic and up until just a few months ago was, in my opinion, definitely unwarranted, and that is why I continue to just carry on buying shares. My yield on this company is a lot higher than the 3.3% because of buying shares so low, and I'm happy to just sit on that position now and keep building it over time in line with the rest of my portfolio. I don't want to taint any position or have any position in my portfolio too dominant, but this company is so well managed and and rewards its investors so well that it's hard not to just keep buying shares at the particular value that it was at. Any dip in this share price is well worth a buy. Any dip below 15, I will be diving back in it at the moment. I am super happy with my investment in this company going forward, and I'm going to be holding it long and strong for many years to come. I hope you've enjoyed today's video, guys. Hopefully it's helped you out. You should get and have a look at Shell yourself. Thanks for watching, and I'll see you in the next investing episode.